Good afternoon, my degenerate crypto friends. How you doing this fine afternoon? Well, as it seems, Aave was hacked. DeFi hacked again. Is it safe to be in DeFi? That's the question I want to answer today. Is it safe to use DeFi? Or is it better just to store your crypto in a nice ledger? So here we go. Aave. So we can see Aave dropped from about 1.8 billion to 1.4 billion. That's a pretty big drop. That's actually kind of a good buying opportunity. That's a nice buying opportunity if you want to pick up some Aave, because this is a decent protocol and it's been around for a long time, and I'm sure it will survive this hack as many others have. And almost any time a good protocol gets hacked, that's a good time to buy it because it's probably going to come back. So that said, what exactly happened in Aave? Is it safe? Is it safe to be to have your money in DeFi? Well, the answer is it safe? For the most part, it is safe. For the most part, it is safe. Your chances are probably about 1% that you're going to lose money in a hack. But let's look at the details here. Let's see exactly what happened with Aave. So there was a vulnerability in Aave. Wait, let's take a look at Aave here. Let's take a look at Aave. DeFi platform. Let's see. You can. I'm getting a warning. I'm getting a crypto warning here, a virus warning from the site. Okay, so you can see like what the yield is basically on this stuff. So you got 15% on Tether. Wow, that's a lot. On USD coin, 15%. USDE, 16%. 23% on this one. 18% on Euro coin. Oh, they even have PayPal. I haven't even looked at this before. So anyway, so you can see what yields here. So you put your money in the platform and they're going to pay you this yield. Now, take into account that any yield you make on crypto is not going to be much in comparison to the extreme volatility, how much it can go down or how much it can go up. Now, if you're getting paid yield on a stable coin, well, that's fine as long as you don't lose your money, as long as it doesn't get hacked. But otherwise, if you're getting yield from other stuff, from other crypto, you might be better off just holding it. But anyway, so what happened on Aave here? So apparently there was a vulnerability in what they call KelpDAO's rsETH system. So some kind of cross-chain bridge through layer 0. There's always issues with bridges. Bridges are where people get hacked. Like, people don't hack like the protocols. Like, people don't hack the blockchain and stuff. They hack where there's like a connection between blockchains through a bridge. So that's what happened here. So there was some kind of weak validation, a single signer verification flaw to mint or drain rsETH, 116,000 rsETH. rsETH is like something they give you. It's like a version of ETH, or it's like their copy of ETH that they give you that duplicates the price of ETH. So you hold that. Now, then when you cash out, then you can just change that and you get your normal ETH or whatever back. So basically, fake or unbacked assets were created or drained due to a bug in the bridge. So how Aave got pulled into it: deposited the attacker used Aave to deposit the stolen invalid rsETH as collateral. Okay. Borrowed large amounts of WETH and real ETH against it. The collateral later turned out to be worthless or unbacked, so the loans could not be liquidated. Okay, I'm just going to stop right there because this is going to get kind of confusing, the technical details. But a simple analogy would be someone deposits fake gold as collateral, borrows real cash against that collateral, and then fake gold is discovered, and the lender is stuck with the losses because the collateral is no good. So that's basically what happened. Now, technically how did they manage to do that? I really don't understand. It's kind of over my head, these details. But so just the important thing is to know that these places, this stuff does happen. There are hacks. Money does get stolen. Usually it has to do with a bridge. Bridges are risky. Okay, so let's see. Now the question is, how risky is it to use DeFi? I mean, what are your chances of losing your money? So the short answer is the chance of losing money in DeFi due to hacks or exploits is material non-trivial. Even in a cool market No, not a cool market. Even in a bull market, it's better thought of as a persistent background risk rather than a rare event. The data suggests a low probability per individual action, but high cumulative risk over time and across platforms. I really didn't understand that last paragraph that ChatGPT just spit out for me, but what I understand is that your risk is pretty low. Your risk is, your chances are about 1%. So if we look at actual data from 2020 to 2026, multi-billion losses every year. 2023, we had 2 billion, 2024, 2.2 billion, 2025, 2.9 to 3.4 billion. So that's almost 12 billion in hacks for 5 years. It's a lot, but what are your chances? Your chances aren't very high. It's usually just a few concentrated events. So, and sometimes you get recovery. Sometimes you get some recovery, but usually you don't. So is there less risk when you have a market like right now? Like now it's like a bear market. Everything is very cheap. So in bull markets, you have more capital flowing into DeFi, bigger targets to attack. The attackers shift to high value exploits instead of many small ones. Total losses often increase even if number of hacks doesn't. So then there's fewer incidents sometimes, but higher severity per incident in bull markets. So a bull market does not reduce your risk. It can actually increase your exposure because you hold more value in a riskier system. People are more crazy when we're in a bull market. In 2021, in my first year in the market, I was doing a lot of DeFi stuff because everything was going up and I was seeing how it was going up. And sometimes I would put like, not big money, but like maybe I would put 500 into some platform. There was a lot going on Phantom, which is now Sonic back then. I was putting a lot of stuff on Phantom projects. Sometimes I would put like 500, I would get like 300 back the same day. Like it was crazy. Just because everything is going up, there's tons of liquidity, there's tons of money coming in. It's a Ponzi scheme. When there's a lot of money coming in, you can make a lot of money in DeFi. So right now it's actually much more stable. It's much more stable, and whatever yield you see is more consistent. In a bull market, the yield is just crazy and people do crazy things. So basically, where most losses come from are human attacks, phishing, wallet compromises. That's 64% of losses in 2025 and 75% in 2026. And then off-chain compromises, keys, accounts. Yes, accounted for 80% of stolen funds. So, your chances of losing money in DeFi are very, very low. It seems kind of scary and it could happen to you. I know people that happened to them, but it's very, very low. So DeFi in general is not risky. Now, we have had some incidents, like, I don't think I have it down here. We have had some incidents with big platforms going under. If I can remember the names of those. Okay, yeah, we had Celsius. I remember that. That was a big platform. Celsius collapsed. Voyager collapsed. And then we had FTX collapse, but that wasn't because of DeFi. Now, what happened when these big places collapse, the biggest risk you have in DeFi, you absolutely don't want to be in DeFi when the market is very hot. You don't want to be in DeFi because when the market is hot, then it can turn any second. When the market turns and goes from hot to cold, that's when places collapse and that's when people lose money. So you want to be in a very secure, if the market is hot, you want to be like staking in Binance or something like that, just very, very, very solid. You don't want to be staking in whatever platform. You just don't want to do it. You don't want to send your crypto there. You want to keep your crypto tight. You want to keep it in your ledger or in an exchange. Well, FTX collapsed, so there you go. But I would say like Binance, and there's some exchanges that are pretty secure. But you definitely don't want to be in DeFi when things are very hot, because that's when crazy things happen. And then when the market turns, it's over because, well, when the market turns, let's see, we got some explanation here. So basically, in the bull market, what happens? Hacks target large pools of capital. Protocol failures are relatively rare. Risk is concentrated in security exploits, not insolvency. So, but then when we get to the transition phase, Failure mode is cascading insolvency and delayed exploits. Liquidity starts drying, collateral falls, leverage unwinds. So token prices drop, so they become worth a lot less. And then you lose your collateral. Collateral becomes insufficient because your collateral is not worth anything. So lending protocols face liquidations and bad debt. Yield platforms that relied on inflows become insolvent. That's what I said before. In the bull market, you've got all this inflow, all this liquidity, all this money's coming in. It's a Ponzi scheme. Yields are very high. But then all of a sudden everything is worth so much less that it just collapses. So then hidden weaknesses come out: bad code, poor treasury management surface, and then sometimes your team disappears, they pause withdrawals, soft rug. So there you go. Now, right now, is it better to be in DeFi to get a yield? Because look, you got some nice yields here. I mean, you're going to hold Tether. Is it better to put money in here and get some nice yields, or is it better just to hold your crypto in your ledger or in a cold storage? Because basically right now, everything is very cheap. Everything is very cheap, so you can accumulate very cheap projects. You can accumulate great coins at a very cheap price, right? So when the market turns, even if it's not a huge bull market, the amount of money that you're going to make is going to be so much more than if you have like your money stored here and let's say you have your money stored in Tether and they're giving you a 13% interest. You're going to make so much more money as opposed to having your money in Tether and getting 13%. You're going to make so much more money if you buy a bunch of crypto at dirt cheap right now. The market turns, it starts going up. Once you get to 2x and the 3x, you're going to be so much farther ahead than having your money in Tether. So that's why I say that right now I don't have anything in DeFi. I wouldn't risk at these low prices. I wouldn't risk putting anything in DeFi. I would just continue to buy. If I have more money, I will continue to buy more top coins at dirt cheap prices. So let's see the core trade-offs here according to ChatGPT. The pros is you get a yield typically 2 to 10% depending on strategy and can compound. So yeah, it will compound over time. So yes, if you're just holding your USDT here, actually that's not a bad idea. I got some cash in the bank. Maybe I should just throw it in here. Holding your USDT here will keep compounding, right? So it's good in that sense. The cons is you got the smart contract risk, you got the stablecoin risk. Well, the stablecoin risk isn't very much. I think it's very low. The chances of Tether depegging, it's backed by real dollars. And then it's often denominated assets you might not want long term. So maybe they're giving you some asset that maybe you have to sell it, or I don't know what they're paying you. And if they're paying you in rsETH or whatever, you might want to keep dumping the rsETH for real ETH. So cold storage, the pros are you have maximum security. Okay, nobody can hack your ledger. You gotta either give them your private keys or you have to accept a transaction that's not good. You have full exposure to upside of the assets. That's what I was talking about. If you're buying cheap, they can go up and you can just make a ton of money. And then you have no counterparty risk. The cons, you have no yield, and then you have the opportunity cost if market stays flat. So you just have to decide. You have to decide what you think the market's going to do. If you think that the market's going to go up in the near future, then you should just keep accumulating good coins at cheap prices. If you're not sure, or you just want your passive income, which is very good if you have enough. If you can dump enough money in there to get a nice yield, although I would be worried about having that much money in DeFi. Then that's a good option too. That's good. So that's it for today. I hope that was somewhat educational and a little bit clear. And I hope to be back tomorrow. Have a great day. Enjoy your life. Be happy. And I will see you tomorrow. Bye.